Tuesday, January 17th, market analysis, Stan Ehrlich. And this is a 4-day week. Yesterday, Martin Luther King holiday was a no market day for most markets. Now, I start out with the S&P 500. The E-mini is the same thing, just different numbers and very slight nuances because of the amount of time that it's open, as far as the charts are concerned, and the signals, et cetera, et cetera. The S&P 500 spider, I think, is building a significant major bull market bottom this year. All year could be a good bull market, and maybe into next year, but that's too far out for me. I think that the low that we saw on June 17th is a first shoulder low on a head and shoulder bottom, and this low could be part of it. And it was a month later, July 14th. Now, the head is blatantly, obviously, on October 13th, the bottom of the market with a gigantic bullish engulfing ER automated buy signal. We caught the bottom of the market so far, and we may have caught the bottom of the market for the whole previous year and the beginning of a long-term bull market on the day, to the exact day. So far, so. Now, there's two things. Markets usually either go up or down. They don't go sideways very long. Never have I seen it go backwards, although I've tried. So from where we are right now, and it's important that I talk about both sides for the moment, up, bullish and bearish, is a juncture. We have overbought conditions. The S&P 500 got overbought based on my custom relative strength indicator. It's not exactly the same as Wells Wilder's, who taught me in the 1970s and 80s, RSI. That's one thing. When you're overbought, you tend to turn around and start slipping back down again. Maybe not today, but very soon, and usually fairly close in price. Another thing, we touched the major long-term bear trend line for the last year. That started December 4th, was it December 4th? January 4th of 2022. So it's almost exactly a year. And this is the sixth time. The first two established the line. And of course, we've got a bearish engulfing on top of the market right there. Third time, fourth time. This is sort of like a fifth time. It went through it a little bit, but closed below it. And today's high is number 6. That's a lot. Trend lines normally don't hold 6 resistance points, which is 4 more than it takes to start the line to begin with, of course. It could stop this rally. Overbought helps it do that. Next, if this is a head and shoulder bottom, I have drawn in the neckline with the solid fat blue line here across the high on December 13th, which was at 410.5. I think it's 410.49 to be exact. A close over that not only will break the long-term bear trend line, but also the neckline and be a new high since early September. Probably a trend changer, past tense. I don't think it's going to do that yet. I think we're going to go down first, and this is why. Overbought. We're pushing against the major bear trend line. The market currently is having a lot of trouble, but it's only down 18 ticks. It's unchanged for all practical purposes. But we're seeing highs that are a little bit higher than the previous day at a lower rate last couple of days. That is as of right now, which is 10:30 California time. If this pattern is what I think it is, you got the first shoulder low in June, you got October 13th for the head of formation, and since they are relatively symmetrical, we should be looking for another new low either exactly on the date of February 8th or a little bit earlier. And I say a little bit earlier because that's the tendency. This pattern has its last sharp low on that symmetrical date going out to February 8th of this year, a little less than a month from now, let's say 3 weeks from now. But within 2 weeks, dropping down into the circle, which is the price range from the 2 lows of the first shoulder, the high and the low extreme, and giving it a little time frame, anything in this circle, and it's starting to be the first day that it could do it, but I'm not telling you it's going to go down 30 points today. But it is around 25 to 30 lower to get in the circle. That's not that bad for a week or two of decline at all. Remember, we just dropped 30 points in 4 days in early December, only a month ago. Not impossible to do. So I'm looking for a low at approximately 366, give or take, a couple, 3-4 points, maybe up or down, and around January 30th up to maybe February 8th in a couple of weeks. So that's my pinpoint time and price for the last shoulder low on a giant 6-month plus head and shoulder bottom. I think is just about to finish forming, or I'm wrong. We bottomed out on December 22nd. That was the low of the last shoulder. It's a simple shoulder. It's not complex at this point like the first one was, which is okay. That happens. And we are about to rally up through that trend line, through that resistance level, through the neckline, and boom, above 410.49 very quickly and very soon. Now, if you go on the bullish side of the market, you should have high volume on the day the market closes above 410.50. There may be a bullish gap involved or a breakaway gap involved on the upside. And it should have a pretty big range for that day, a pretty big ATR or increasing ATR, average true range. So those are, generally speaking, the things to look for. And it needs to stay on a closing basis above 10.5, 410.5. We have basically the same kind of situation occurring in the DIA. And by the way, we're rallying very slightly up on the day, a few ticks now on the S&P, unchanged. The DIA is still down 3 1/3 on the day, even though it's coming up a little. It's been below yesterday's low already. It did not get overbought, and it did not get above yesterday's high. We are overbought on this spider, and we did get above yesterday's high. Therefore, if it can get below before the close today, the low of Friday, we will have a bearish red Ehrlich reversal sell signal. I don't think that's going to happen. We don't have 2.5 hours, and it's got to go down a fairly decent amount. The same commentary applies completely with the QQQ. We have a higher high than Friday. We have an overbought condition. We have a head and shoulder bottom potentially forming, except its last low, shoulder low, if I'm right about the decline, could turn it into a double bottom instead. Nevertheless, a bottom. We have not crossed a major bear trend line or even touched it on today's rally high on the QQQ, which is the weakest of the 3 indexes we just covered, the DIA being the strongest and the S&P in the middle. The Russell 2000 I talk about once in a while, and because this is such a profound situation, I think I need to bring it into the discussion real quick here. The daily data has been overbought now today, the 3rd day. Last Thursday it was overbought, Friday and today. The 2000 has been above the high of Friday. It could also have a bearish engulfing. The RSI here got into the low 80s, not just up to 75-ish. So it's even a better candidate for a reversal. Again, a little bit too far down, in my opinion, at the moment to actually have an outside down day. But hey, I've seen weirder things happen faster, much. Okay, let's go talk about futures. Hey, gold market. Warned you about market reversing. We had 3 days of overbought last week. Today, it made a higher high, therefore it's still overbought at the high and has the possibility of a bearish engulfing. I doubt, but that would be an outright sell signal. So I'm just looking for a downside correction to approximately 1843-ish. That'd be about right. 1840s, low 40s. Okay. Next chart, and then up. Platinum, we caught the top of the platinum market last Wednesday with an outside down day, bearish engulfing, ER sell signal, period. This is now the lowest low for over 2 weeks, and the lowest low and the lowest close probably since the sell signal the middle of last week. That's what I built the trading system for. That's what it does very frequently. Look at some of these other red sell signals, buy signals. Not too many buys in this particular chart, but that's so far so good, just right. Next, a little resistance at the high today, didn't make it, and it closed lower. We're not overbought. I'm expecting a little bit more sideways move. Maybe it's going to slip off to 23, 23.30, something like that, and then come back up again. The trend is up. So I think it is going to make higher highs soon, but there's a little bit more of a dip first. Next, and that was silver, SI. Next, corn. We had a great sell signal. We had 2.5 days, so to speak, of pretty sharp down day immediately after that last sell signal. But here we are right back up to the same price ranges, almost exactly, and we're overbought again. This is how double tops are made. I wouldn't be chasing this on the upside. I'd be looking for a downside correction. In fact, this could be a sell signal, but it's not going to turn red unless it closes lower, which doesn't look likely. High and last pretty much at the moment. So an outside up day and an overbought condition can be bearish. Next, sell signal worked for just a few days a couple of weeks ago. Friendly, like what I see. Looking for higher levels on cocoa. Next, soybean oil, neutral, not much to say. We caught the bottom, had a very nice 2-week rally, and we got the low much more profoundly so. That rhymed. December 15th of 21, a whopping turning point the trading system was able to catch. Next, live cattle, got overbought, still coming down, but now we're kind of close to getting oversold. The trend is up. This so far looks like a very normal correction in this stair-stepping up market. So I would expect it to bottom out fairly soon, probably above 158 or in that area, and then turn back north again to make new highs. Next, natural gas. Oversold a couple 3 days out of the last 6 or 7, probably bottoming out mildly. Maybe a rally all the way back up to 5-ish, but the trend is down. It might go sideways for a bit and then lower lows after that. Can't tell. Turning a little bit neutral, but basically bearish longer term. Possible rally short term. Next, coffee. Overbought. And this is very unusual. Friday, we had a lower low and a higher high in the previous trading range day on Thursday. And that was Friday. And today we have another back-to-back outside trading range with a higher close. So that's a bullish engulfing 2 days in a row. But again, we're overbought. And these, and I just said it a moment ago, bullish engulfing's overbought condition can be bearish signals. I'm not liking to say that yet, but if we can get below today's low, like tomorrow or the next day, we have a short-term top. It'll probably drop off easily below 4 and maybe get closer to 380. Next. High grade, we just looked at that. Next chart is wheat. Support's holding, bouncing off previous lows. Didn't quite get oversold. I'm neutral to slightly bearish. Nothing going on. Live hogs got oversold. Today is up sharply. I think it has a little bit more elbow room to the upside, maybe 92, 91 to 92. And then I think it's going to turn down. The next time down, you will be making new lows for quite a long time frame. Those will be new lows since the summer. Last week, we bounced off the October support level that was created. And that would be very bearish long term for live hogs if during the next decline or soon, within a week or 3, we can make those lower lows below 86 on a closing basis. Next chart, coffee. We saw lower lows last week for the trend, which is still down, but it got oversold, no surprise. And we've rallied for a day or so, no surprise. I think it has a little bit more rally to it, but around 160 or a little under, 158 to 160. I think it'll stop rallying and turn right back down again. I'm bearish, looking for lower lows soon. Next, OJ. What can you say? Neutral. Oh, except that there's a possible head and shoulder top here. The fact that we went down slightly today could be the beginning of the move down from the last shoulder high. Now, other than that looking a little bit weird and unusual, it's still plausible that the price range could have actually done that on Friday. I just didn't double check it yet by looking at a 1 minute chart or tick chart or something. But that is a shoulder, maybe. It's at the right price at the right time, and you've got a slightly upward slanted neckline across the bottom. So it's got all the body parts. Let's see if this pans out in OJ. Next chart. Soybeans. Up against resistance, but it stayed there, and it's still there. Looks like this is going to be a breakout, and it's going to be new highs for months since July. Uptrend, stair-stepping its way higher, not overbought yet. Probably able to get up to 1568, something in that area, before it turns back down. Looking good. Next, heating oil. A little resistance seems to be stalling it out at the moment. Big sideways trading range, almost what you might call a pennant, sort of. Next chart. The E-mini is not only a stock market index, but also a futures contract. Everything I had to say about the S&P 500 SPDR applies to the S&P E-mini futures contract. We had our October low, which was October 13th this year, a whopper, great one. And I started talking about the likelihood of that happening approximately 2 months before October. And we even had a couple of warning buy signals. One of them worked pretty well. One of them didn't work at all. Well, I don't want to say everything a second time. I spent a lot of time at the beginning on those indexes. Next chart, sugar. There's also a possibility of a head and shoulder top here. The neckline is just a little bit downward slanting across the low that was on November 28th and across the low that we saw a couple of weeks ago, and that would be January 9th. We could, for a few more days, rally a little bit more to create a better shoulder, more symmetrical timing-wise, a little bit more even as far as price levels around 2050 would be concerned. That's quite plausible. But if that happens and you then start to turn down, whoa, be a nice looking shoulder and a very good potential head and shoulder top. We got overbought at the top of the market. We got overbought on the first shoulder rally. I have a sell signal in the first shoulder. It worked for a few days. Too bad I didn't get something on the very high. We'll see something surface maybe in the next week or two as far as a red ER sell signal if the head and shoulder pattern happens. And that's premature to say that. So neutral for the moment. Next, bond futures and 10-year notes in a moment. Dropped off a little bit today, but closed on a relatively strong note, unchanged relative to the range of the day, strong, near the high, but unchanged. So went day to day, it went nowhere. I do think that interest rate futures are building long-term major bottoms. I can't put my finger on what I've got at the moment. I certainly expect more strength. If it can close above 132, that would be quite bullish, probably up to 140. If that does not happen, we could go fiddling around in this 123 to 132 area for a while. Below 123, you're going to come down and challenge the bottom, which in itself was a little bit of a lopsided head and shoulder bottom back in September, October, November. It worked pretty darn well, actually. Okay, next chart is the 10-year notes, and you've got the same picture here, basically. It made minor new highs recently, but no upside follow-through. So back to neutral, sideways. I'm looking for a breakout, looking for a signal, looking for something dramatic to happen here. We were able to and did catch a very important turning point back in August 2nd of 22. That was a great signal. Next, crude oil. Overbought, oversold at the bottom, going sideways for the moment, back and forth. Might see a little bit more of that, but what's the trend? The trend is now down. All of the bull trend lines have been broken. We did test some support pretty darn accurately, but that was a month ago. And we had a couple of little rallies in the meantime, and there's a lot more resistance up above the market, and it's there. So I would not be surprised to see crude oil turn down any old time. In fact, today might have been the day. I really can't tell for sure. Next, soybean meal. Bullish, long-term breakout, test of support, starting to make new highs in the last couple of weeks. I think we can get above 480 without a problem in the next few days, maybe tomorrow. Neutral to bullish, actually bullish. Next, gold. I started out with gold, overbought, looking for more of a downside correction. You guys, I'm going to pass on. Well, actually, I'll comment about forex a little bit. We're overbought now for 4 days in a row in the euro dollar without any upside headway. The highs the last 4 days are almost exactly the same. Today's close is the lowest closing price for the previous 3 or 4 days. It seems to be starting to work its way back down. First support area would be about 106.88, somewhere in that ballpark, down to about 106. No, 105, 105 and a half, let's say. There's other support areas on the way down as well, but this is a 4-day overbought condition and an uptrend. Normal to have a little correction. I stress a little. I think the trend is still up. I'm not looking for any major move down at this point. And I'll comment about the dollar index, which is exactly the opposite. Oversold, looking for a short-term rally. US dollar to the Japanese yen. We had a fantastic sell signal smack dab on top in October 21st. We had a buy signal that worked for a few days, very nicely so. The ER signals trading system, excuse me, automated trading system creates signals based on data from a daily data chart, which could be a candlestick, it doesn't matter, or the ones I like, vertical bar charts, and executes the actual trades automatically on 1-minute charts with, of course, automatic trailing stops always. You can set a variety of features, but the default features we've chosen to use for a couple of years have made money. Not as much as I'd like, but made money. Better than most systems out there, I'll tell you. Australian dollar to the US caught the bottom of the market. Those are the ones we all love. Bullish green on the bottom. And pardon my cough. Expecting to see new highs soon. Like what I see. US dollar to the Canadian. And these signals will work on the futures, currency futures as well. International indexes, sectors I bring up once in a while when I see a variety of turning points in sector charts. Any chart of an open market worldwide. It's because the strategy, the automated trading system, the technique, the style, the philosophy, etc., is based on human nature and what I've learned over 52 years of being a technician. All right, so fairly neutral here. We got oversold. I think there might even be a little bit more bounce, but I'm neutral to slightly bearish US dollar to the Canadian. How about the US dollar to the Swiss franc? So neutral to bearish. I expect to see new lows any old time. It's been coming down for a day or two, but it's not really oversold. Okay, yeah. And look at the buy signals. We had a buy signal right here just before a whopping great rally for a couple of weeks. A good buy signal on the bottom for a few days. That was not so good. And a great buy signal at the bottom of the break and all the way up for a huge rally with a preceding sell signal 4 days earlier. Some really great signals lately in the Swiss franc, US dollar, the Swiss franc. Lastly, the euro to the pound. We have an outside down day, bearish engulfing today, but it was not overbought. Therefore, I do not have a red bearish engulfing like we have seen a few times. And a green at the bottom, yay, for this whole year plus on this particular chart. Wow, that is a great pick as far as the bottom is concerned. Again, I use RSI, but it's a custom version for Ultra Strength Index, and you can see it on the bottom of the screen. It does look like a vertical bar chart, but it's not. And I use bullish and bearish engulfings, but I have a twist on the exact specific coded definition of a bullish and bearish engulfing. And then we handle the entries in two different special ways for ER1 and then differently for ER3. And in each case, we have a scalping mode for the ER1 and an overnight version, as well as a scalping and overnight for ER3. That's a total of 4 trading systems. And we're fairly close to getting them to work correctly on Ninja Trader. I know what I want to show you lastly, and for you guys that have stuck around, we got a buy signal on January 6th on this particular issue, ABNB, Airborne. Oh, Airbnb. That's it. Sorry. Didn't catch that at first. Airbnb. We used to be on their list. And we got filled on the second day after the signal, relatively close to the bottom. Not as perfect as I've seen many other times, but for the most part, yeah, nobody's complaining. Didn't take off the first day. The second day, it took off very, very nicely, made some really good money. Then it took off again the next day and the next day, and this is today. This is now a $14.07 profit per share on a 85, what do we buy it at? $87 approximately, and it's currently at 102 almost. Nice, very nice. Now, I do have to mention, in all fairness, this is not the default sell stop, the STS yellow trailing stop. I increased what we call a kicker to a little bit higher number so it would stay with this trade. Otherwise, I think we get stopped out on this lower opening a couple of days ago and made a very, very nice trade. But having looked at the charts since our offset, I thought, hey, why don't I show them something that certainly can be done easily enough for longer term traders. If I made the kicker even a higher number, then it would slow the movement of the stop down even more. It's not a moving average. It's based on other factors. It looks something like a stair-step moving average. It acts something similar as well, but it's not. It's got other features in it that are unique completely. Thank you very much. Talk to you tomorrow. Have a good day. Watch this potential head and shoulders now. It's either done or it's about to be done, I think, and the S&P in the next few weeks. Signing off.